What is up, YouTube? Welcome back to Stacks by the Numbers, and today I wanted to do a quick update video on two electric vehicle stocks that I know a lot of people are involved in, a lot of people are talking about. We're going to be looking at Mullen Automotive and we're going to be looking at Polestar PSNY. So I'm going to do a quick update here on these two stocks, and then I'll leave you guys with a little statement, a little peace of mind here. So first of all, this is basically when I made the video here. This was the end of August, about exactly 1 month ago. As you can see, the stock was up at 72 cents. I predicted that the company would pull back to a fib level of about 52 cents. I showed you guys on their website that they said that they were not going to be in production for about 2 years. It was going to be Q3 of 2024, so there was no rush for you to buy the stock, right? As you can see, September 8th, a little bit of a pop. Apparently, they took a stake, 60% stake in Bollinger Motors for $148 million. So initially, people were like, oh yeah, that's awesome. That could work out. It could help the company. You got to pop up to about 79 cents. And then you saw the stock really started to pull back all the way down to about 52, 53 cents. Reason being, they're not going to be in production for the next 24 months. They have no money coming in. They just wrote a check for $150 million, right? So it could help them in the long term. In the short term, it kind of sucks though, right? So investors, analysts, that's not what they wanted to see. They pulled it back to about 52, 53. As you can see, bounced off about 52 and change. That was the main fib level I spoke about in my initial video. Had a run up to, what is that, about 58. Pulled back down, retested 52, had a run up to about 57, and then as you can see, it gapped down, it opened, it tried to hold that 52 level, and then it just began to break, it began to sell off, hit this fib here at 43, and really began to pull back and sell off with the rest of the market. It has been rocky and volatile for the last several weeks, and as you can see, new 52-week low of 33 cents a share. Now again, I'm not that kind of guy to point the finger, haha, I was right, you were wrong. That's not the reason why I make the videos. That's not the kind of guy I am. My main point was why force yourself into a stock in a position here at 71, 72 cents when you could buy it at 52 cents or 42 cents. That's the point I really try to make when I make these videos. So listen, if you got in the stock here and you're down like 40, 50% right now, listen, I know it sucks. I have been there. I really have. But at the end of the day, you bought it for a reason, right? So take a step back, take a deep breath, relax. You knew there was going to be some short-term volatility. And listen, if you are able to buy more shares here at a lower price and lower your cost basis, awesome. If you're not able to, again, remember, you bought it for a reason. They're doing an unveiling in about 2.5, 3 weeks. I think it was like mid-October, right? So you might see a little bit of a run-up back to, like the 50-cent range going into that date, that announcement. If people receive it positively, you can jump back into 60, 70, So if you are worried about the volatility and you're able to potentially just take it off the table with like a small loss or even a small gain, by the middle of October, maybe you want to do that and you want to hang out till 2024 before you position yourself again. Or on the flip side, if you don't have the money to lower your cost basis now, again, you bought it for a reason. So even if we turn around 3 years from now, and let's just say this thing's at like $2.50, $3 a share, right? It went up, but it didn't go to the moon, right? Even if you own it at like 75 cents, if it goes to $2.50, right? If we double that, now you're at $1.50. And if we double your investment again, now you're at $2.25, right? So you made like 220, 230% return with a cost basis of 75 cents over the course of 2-3 years, with the stock just going, excuse me, I'm talking myself out of breath here. With the stock just going to $2.50, and you bought it at 75 cents, you still made yourself over 200% return in 24 to 36 months, which is definitely nothing to sneeze at, right? So, just remember that disclaimer. You bought it for a reason. You believed in the stock. Don't beat yourself up too much. And hey, if you do find yourself with a few extra dollars, add to the position if you really believe in it. Moving on here, PSNY. This is a company, again, I had some people agree with me when I mentioned the sell-off and the pullback. Other people obviously jumped down my throat because they own the shares and all they want is the stock to go higher. And believe me, I understand where you're coming from. However, I hate to be the bearer of bad news. No one gives a shit about how you feel about a stock. I'm not going to change the way I make a video because you own it. Right? The company is not going to continue to increase in stock price and value because you own it. No one cares how you feel about it, how many shares you own, what research you did, right? It doesn't matter. Sometimes I dot every I and cross every T before stepping in on an investment. And then the next day, I am immediately incorrect and I end up losing money. It happens, right? It's like they say, if it was easy, everyone would do it, right? And it's true. If it was easy, everyone who had $100 would, just start buying shares, start buying options, and by the end of the year, everyone would be a millionaire and, everyone would be set. But it doesn't work that way. Now, again, a company like PSNY, I know sometimes I come off a little abrasive, maybe a little aggressive here when I talk about stocks or when I talk about my point of view. But at the end of the day, again, it's not about I was right, you were wrong. I know what I'm talking about. You don't. You should have listened to me. Why don't I have more subscribers, right? It's not that's not the view I take here. That is not my angle. I'm not here to troll you. I'm not here to make myself feel better. I am here to help you guys with better pricing and timing. And that's basically what I was saying here. We went over the numbers in the comment section and in the video, and I was saying that, if they're lucky, they could do like $2 billion for the year. And at this time here at $9.5, $10 a share, the market cap was like 22 billion or something. So just tremendously overvalued, trading 10, 11 times earnings, right? So I said that can pull back to like half at least. And it could potentially even go lower. So as you see, the stock pulled back to about $8.60. Then it ran back up to a little over $10 a share in the short term. Then it really started to pull back here into around the $8 level. They posted earnings, wider loss than they wanted to see, not what analysts and holders and investors wanted to see, and the stock really began to pull back. And as you can see, pulled back to about 6.25, bounced off that low, ran up to about 8.25. And has since had another leg down, pulling back to about $6 a share, new 52-week low of $5.93. So again, if you're already in the stock at 9.5, 10, if you do have the capital to add to the position, it's entirely your own prerogative, but obviously it's about 40% lower than where it was, so you can lower your cost basis here. If you did see my video and you were patient and you gave it some time and you position yourself, here in the 7s or even in the 6s, good job. You're in a little bit of a better spot than those who bought it a little bit earlier. But again, just like I said with Mullen, don't beat yourself up. Take a step back, take a deep breath, relax, and remember that even if you bought it at $10 a share, it's because you believed in the stock, you believe in the company. And if we turn around 24 months from today, let's say conservatively the stock's at $20, $25. If you own it at $10, that's 100% return, 150% return over the course of 2 years. Now, of course, we all want more, and again, we all want millions of dollars, but the average broker on Wall Street, is showing their clients like 10 to 15%. Even like the Warren Buffetts of the world sometimes, maybe if they have a good year, they'll see like 15, 20%. Like, if you're making yourself on average like 50, 80, 100%, you're doubling your money year in, year out. Those are phenomenal returns. They really are. So, again, could you have made more if you bought it at 6 instead of 10? Yeah, of course. I mean, obviously, that's common sense. But at the end of the day, if you're right, you're right. And if you believe in the stock and over the years it does go higher than what you paid for it, then you got it right. So don't beat yourself up too much. But here it's showing the market cap here at about 12.8 billion. In my opinion, it could go lower. It really could. But also, it could bounce from here. Last time it hit 6.25, like we said, it bounced up and went to 8.25. So it could find a little bit of a base here at the high fives here, low sixes, and potentially bounce back up here into the sevens and maybe even the eights. So only time will tell, but basically just wanted to do a quick update here because again, all about pricing and timing. Why force myself in at 9.5, 10 when I basically knew that we can get in at the sevens or the sixes? Same thing with Mullen. No need to force myself in here at 72, 75 cents a share when I basically knew that it was going to pull back to the 52 cents. I honestly didn't see this coming, but hey, if you were patient and you did wait for a better price and a better time, congratulations. Again, if you're already in the stock and you're taking big hits, just remember, be confident in yourself. You bought it for a reason. And if you do happen to find yourself with a few extra dollars, if you still believe in the stock, don't be afraid to buy a few more shares if you want and lower your cost basis. But I'm going to leave it there. If you have any questions, comments, or concerns, please leave it down in the comments section below. I'm usually very quick to reply. Stocks by the numbers. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm, helps me get a few more eyes on the channel. If you do appreciate the content I'm putting out, please do me a favor. Push the subscribe button. Personally, it means a lot to me. Obviously, I'm trying to grow the community, grow the channel. But remember, don't beat yourself up. Everything happens for a reason. Stay sharp. Stay focused. If you're investing for the long term, envision the long term. That's where your mind should be, right? Don't sit here like, wow, I'm down 30% in 2 months. No, because you wanted to buy it and position yourself for the next 2 years, for the next 5 years, for the next 10 years. So just keep that in mind. I know it hurts in the short term, but just keep in mind that you're here for the long term. And listen, on the flip side, if you did want to do a short-term trade and you are down, 30, 40%, listen, I know it sucks, but again, no one is ever 100% right with anything, especially, more importantly, with investments, right? So if we can just cross the T's, dot all the I's, try to look at all the different angles, and really just try to be right more than we're wrong, even if it's only 70% of the time, which is kind of a shitty ratio, but if you're right 70% of the time and only wrong 30% of the time, it's going to slowly help you out over the months and over the years, and you're going to start seeing some nice growth, okay? So we'll leave it there, a little disclaimer. But hey, listen, I want to thank you guys for stopping by. And moving forward, like I always say, I know markets are rocky, markets are volatile, they're uncertain, so I wish everyone success. I hope everyone makes a couple of dollars, and I hope everyone has a good weekend. Take care, guys.